So what makes a good active equities manager? Is it their philosophy? Is it their interest in markets? Is it their alignment of interests? Or could it be the people they hire, or maybe the process, whether they're value or growth? Or could it just be that word hidden right in the middle? Could it just be a bit of luck? Well, we believe all of these factors do have a part to play. But really, for you and your clients, what you're looking for in an active manager at the end of the day is returns above the benchmark. You want alpha at the end of the day. But to us, it's much, much more than that. Any manager can have a good 1 or 2 years, or in the case of one of our funds, a pretty tough last 12 months. But myself and my portfolio managers, what we want to deliver clients is consistent and resilient alpha over the long term. That's what we're striving for at Firetrail. And how do we approach this for our 4 funds? Well, firstly, we want the teams to have the ability to navigate the cycles. The second is we want them to have a flexible approach. And then finally, to look at all corners of the market. And how do we actually do that? Well, we want the portfolio managers to look at every segment: value segment, growth segment, and also the quality segment. The reason why we do that is it's very difficult to predict which one of these styles is likely to outperform in the next 3 or 4 years, or as you can see on this slide here, which one is likely to underperform. And all styles have incredibly difficult periods of underperformance, as you can see on this slide. But the key thing is we want the team to be flexible and have that ability to navigate change. But today it's much more complex than that. It's much more complex than just value and growth. What we do at Firetrail is we segment value a couple of ways, because the market is different today than what it was 5 years ago. And we segment growth around 3 ways. In terms of value, we look at it 2 ways. Effectively, companies that the market are recognising as value companies, which we call compelling value. And I will go through an example or 2 a little bit later. And the other section where the companies, the market is not recognising, which we call that unloved section. Now, around 25% of the ASX 200 today is in that unloved component. At Firetrail, for our 4 funds, we're very happy to invest in those companies, but we have to see an improvement in earnings or a catalyst that will kickstart the share price within 12 months. It has to be a fairly short period these days. Part of the reason for that is there's only around 30 cents of every active dollar chasing value companies these days. There's just not enough money chasing these companies. So if that catalyst is too far away, these companies will remain cheap. In terms of growth, we segment it 3 ways. Fortunately for growth companies, around 70 cents of every active dollar goes into growth. The risks there clearly is you've got a lot of overpriced growth traps there, so you need to tread carefully. When we look at growth, we look at cyclical growth companies. These are great growth companies, but at the end of the day, they are facing the consumer or the economy. So if the consumer or the economy is slowing, as we're experiencing today, these companies are susceptible to earnings downgrades. And we know the market punishes earnings downgrades. Share prices follow earnings at the end of the day. Structural growth companies have to have at least 5% EPS growth, at least for the next 5 years. And then finally, what we call those big themes out there. These companies either have very strong moats, very limited competition, or they're facing or leading a very strong positive change component. With big themes, think sort of AI, technology, data centres and the like. The key point about the big themes is that the earlier you can get in and invest, the more alpha you can make for your clients, because there's generally, as I mentioned before, a wall of money chasing growth companies today. But to us at Firetrail, we're looking way beyond just value and growth. It is more complex than that. So when we construct a portfolio, we want exposure to all corners of the market. Value companies, growth companies, unloved, compelling, and the like on the growth side as well. So if we dig a bit deeper on that portfolio construction puzzle, particularly for, say, the high conviction fund, the large cap fund, when we think of unloved, we're looking at companies where there's that, the market is not seeing it yet, but we're seeing this clear line of sight of improving earnings and a share price re-rating. So we like companies like an Incitec Pivot and a Santos. In terms of compelling value, we like companies like a Suncorp or a Newmont. Yes, the market is starting to recognise these companies, but they're still incredibly cheap versus their history. In terms of banks, well, we find it very difficult to find good quality, relatively cheap banks, but we do like National Australia Bank as the best one out of the four. Turning to growth, cyclical growth companies, yes, they are facing the consumer, but we like companies like a Treasury Wine Estates and a Flight Centre because we're confident they've got resilient earnings for 2024 and very, very strong earnings for 25 and beyond. Those structural growth companies, Fisher Paykel, CSL, at least 10% EPS growth, at least for the next 5 years. High quality growth companies. And then finally, the big themes. Remembering the moat, limited competition, that EPS or revenue growth for the best part of a decade. We like companies like an Infratil, which is now more than 50% data centres, or a WiseTech Global, which is with their very unique product offering and incredibly limited competition. But to complete the Firetrail high conviction puzzle, there is one missing piece. Again, it's a big theme, and today it has been the best performing IPO in the last 3 or 4 years, and for whatever reason, it's a company that the media seems to love to hate. It's none other than Guzman y Gomez, or GYG. GYG is Australia's fastest growing QSR, quick service restaurant, franchise in the Australian market today. Why does it complete the Firetrail high conviction puzzle? Well, there's 3 key reasons why we're very excited about GYG going forward. Firstly, it's their franchisee profitability. Secondly, it's their store growth opportunity in the Australian market. And then finally, they're expanding their addressable market. And I'll touch on each of those 3 quickly now. Turning to profitability, but let's focus first on revenue. GYG is second only to McDonald's in terms of their typical revenue per store. Their typical drive-through stores have around $6.1 million of revenue per annum, with an EBITDA of around 1.3. Their strip malls are a touch less. The key point here, though, is every new GYG store opened today has a payback period of 18 months or less. Every other brand you see here, excluding McDonald's, is usually 3 or 4 years before they get a positive payback. So moving from revenue straight into profitability, every single franchised GYG store that has been trading for more than 4 months is profitable today. And in fact, their median return on investment is over 50%. The key about any successful franchise store is all about keeping the franchisees happy. How do you do that? You get them to profitability, and you get them to profitability very, very quickly. Again, remembering the payback time now is under 18 months. So we have happy and profitable franchisees, point 1. Point 2, their growth runway in the Australian market is absolutely incredible. They currently have 185 stores in the Australian markets versus a McDonald's of over 1,000. They have 30 full-time property executives scouring the Australian market looking for the incredible best sites. Their aim is to launch around 30 new sites per annum. We think in a couple of years that'll probably get to 40 and even beyond that. So it really means that their growth runway is all but assured in the Australian market for the best part of a decade. And the growth has just begun. That significant white space to roll out more stores is just incredible, just in the Australian market. And then the third thing that matters is they're expanding their addressable market. They're no longer just focusing on the 18 to 30-year-old age groups as all other QSRs focus on. Their catch cry is clean is the new healthy. They have one of the only QSR meals in the Australian market that actually has 0 unacceptable preservatives and additives versus a McDonald's typical meal of around 48. This has all been independently audited by health experts over the years. But their catch cry today is clean is the new healthy. And this is truly resonating not just with the 18 to 30-year-olds, but it's now the 5-year-olds to, in effect, 85-year-olds. So they've got an enormous addressable market today. And they've changed their process now where they've got 5 meal offerings a day. Clearly breakfast, lunch and dinner, but then they have afternoon for the tradies, for the teenagers and the uni students, and then after 9 for those hard workers out there and obviously the youngies coming back from their nights out. So addressable market, 5 to 85, serving 5 meals a day, 7 days a week. To us, one of the biggest and best big themes in the Australian market today is Guzman and Gomez. It has incredible franchisee profitability. It has store growth unabated in the Australian market for the best part of a decade. They're expanding their addressable market. They have an incredibly strong management team, one of the best boards for a mid to small cap company. They have no debt. They have one of the best positively recognised brands in the Australian market. And maybe, just maybe, they could also be successful offshore. That's another free option for many years down the track. So to us, it is a big theme, and it does complete the Firetrail high conviction puzzle. We were one of a handful of managers that got into this company pre-IPO at around $18 a share. Remembering with the big themes, the earlier you can get in before that wall of money comes chasing you down, the better. And we'll be a long-term investor as long as management deliver on those growth objectives. So it does complete the Firetrail high conviction puzzle, but it also completed the absolute return puzzle and the small companies puzzle. To us, Guzman and Gomez is a big theme that is delivering. So thank you.